The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Scorebox Europe. I'm Steve Sedgwick with Karen Cho in the studio and Ben Boulos live from the trading floor of commodities broker Onyx Capital. These are your headlines. US President Donald Trump urges allies to join a coalition to protect the Strait of Hormuz from Iranian attacks, arguing that countries relying on the region for oil have a stake in defending it.
We are demanding that these countries come in and protect their own territory because it is their territory. It's a place from which they get their energy. And they should come and they should help us protect it.
Iran warns any strike on its Karg Island oil infrastructure will trigger retaliation against US-linked sites in the region after the US strikes the island's military targets while sparing its oil terminals and refineries. European foreign ministers are set to discuss expanding their Middle East naval mission from the Red Sea to Hormuz as the bloc responds to President Trump's call for allies to help secure the strait.
And I'm on the floor of the commodities trading firm Onyx Capital, where we'll be getting a unique insight from traders like those around me about how they're navigating some of the wildest oil price swings we have ever seen.
Very good morning to you. Ordinarily, of course, we'll be straight on to the story in the Gulf, which is the biggest story on the planet. But there is an amazing situation happening in European banking, something that I guess we didn't think would come back straight away, despite the fact that Commerzbank shares are down 18% year to date. Maybe because Commerzbank shares are down 18% today, that Unicredit, 18% year to date, that Unicredit has launched its bid for a public takeover of all Commerzbank shares. They currently own around about 26% of the shareholders list, plus another 3.97% linked to total return swaps. Commerzbank share capital is stated at 1.13 billion divided into 1.13 billion shares. But the point being here is that Andrei Archel has come back to the table and looks like he's coming with another offer which is expected to be in the range of 0.485 new Unicredit shares for each Commerzbank shares. Well, it's quite extraordinary. And by the way, the German government holds 12% of Commerzbank, and I think that could be yet again a sticking point. But very interesting that when a lot of people were distracted elsewhere, perhaps, and just looking at other big issues that are going on in the world, that Andrei Archel has been laser focused and has launched a bid for Commerzbank. Karen.
Just a couple of points here. Don't forget the ECB had given authority for Unicredit to up its stake in Commerzbank right up about to 29.9%. If it wanted to get through the 30% threshold, it would have had to have launched this direct takeover today that we're seeing that has been announced. So that stake couldn't be upped past 30% without launching an actual takeover offer. So that has come through obviously today. In terms of some of the obstacles here, you've mentioned it from the regulatory side, from the government side on that stake ownership. The other one too has been around the valuation metrics. And don't forget what you've seen this year has been a reset lower just even in recent weeks thanks to the situation in the Middle East. European banks have been hit hard and some more than others. I mean, Commerzbank is down 18.7% so far year to date. Unicredit down a little bit less, down 10%. So whether it was some sort of valuation change here, that was also one of the reasons for Andrei Archel to strike now. And that is worth bearing in mind too.
Yeah, and just to remind everybody, in terms of pure shares owned at the moment, according to Reuters, Unicredit owns 26.04. As I mentioned, the German government owns 12.72. BlackRock is the third largest holder at 5.73 of Commerzbank. Norge Bank Investment Management holds 3.14. We'll come back to this story. US President Donald Trump has called for international cooperation in securing the Strait of Hormuz as exports through the vital oil chokepoint remain all but halted amid the war in Iran. The US leader said Washington is talking to 7 countries about the possibility, declining to provide further details as to who the White House has contacted. Mr. Trump previously said in a Truth Social post that he hoped countries including the UK, China and France would participate. Despite a de facto closure of the Strait of Hormuz amid the ongoing conflict, India's foreign minister says 2 Indian-flagged ships were allowed to sail through the critical waterway following talks with Tehran. However, the disruption looks set to continue, with the Iranian foreign minister again dismissing the possibility of a ceasefire, saying the country will defend itself for as long as it takes.
We are hearing this morning from the EU's Kaja Kallas, and we've got Europeans, don't forget, arriving to have discussions this morning about some sort of coalition around the Middle East and securing the Strait of Hormuz. Kaja Kallas saying dangerous precedent set by US, wavering of sanctions on Russian oil. We'll discuss how to keep Hormuz Strait open. Let's dip in and take a listen.
Opening for the Strait of Hormuz, but of course, as you can see, it's not easy. And then we will also have a discussion on the southern neighborhood. So there's also how these Middle East crisis affects southern neighborhoods. So we will also discuss this and many other topics. So please.
German foreign minister yesterday said that he doesn't really see that it's so necessary or that it would be very helpful to extend ASPIDES. What is your position on this?
We will discuss this today. So we have proposals on the table. What could we do? But of course, we need to also have the member states on board. If the member states say that we are not doing anything with this, then of course it's their decision. But we have to discuss how we help to keep the Strait of Hormuz open.
Do you have some updates on these attempts to negotiate with Russia? Because it was a visit of some European diplomats to Moscow, and there is some publication that they got a very not polite answer from Moscow proposition to have Europe as a part of the negotiation. And do you feel that Europe now is a part of negotiation in some way?
Yeah. Well, this is not surprising. I mean, Russia has shown that they don't really want to negotiate. They are actually increasing their attacks on Ukraine because they want to have their maximalist goals satisfied. And that's why, because Europeans are not willing to give them these maximalist demands, then of course why should they talk to us? What should be our approach is to increase the pressure, and that's why enforcing the oil price cap is very important. Also using sanctions and the 20th sanctions package, fighting the shadow fleet, also giving 90 billion a loan to Ukraine. This is all important, that we would put the pressure on Russia so that they would go from pretending to negotiate to actually negotiate.
Representative, President Trump has said that NATO faces a very bad future if U.S. allies fail to assist in opening the Strait of Hormuz. What is your response to that? And are you
I'm just listening to this one question. I hope you don't mind, Tim. I just think it's a fascinating question. I'll tell you why I'm listening to her answer in a few minutes.
Well, clearly all these security theaters are very much interlinked when it comes to the capabilities that are needed in Ukraine or in the Middle East, when it comes to also our attention. That's very, very clear. And, the actors or our adversaries are also using this. So this is very, very clear. Now, it is in our interest to keep the Strait of Hormuz open, and that's why we are also discussing what we can do in this regard from the European side.
I just want to listen to that answer. My director's ahead of me, because the only reason I say that, and I'll come to Dan in a few moments' time, is because I recall, as you do, a week ago, Donald Trump lambasting Sir Keir Starmer for wanting to send military support to the region when it was too late, when he said the war was already won, and the US accusing pretty much the UK of wanting to get in on the act when the war was won. Now that has changed somewhat, with the president actually lambasting NATO and other recipients of Middle East oil for not having more facilities in the region, and just warning that NATO faces a very dark future if it doesn't support the US on this one as well. I thought it was just very interesting. how that has changed the tune, perhaps, from the administration.
This was a point I was making the other week, that Trump was calling allies to arms, effectively pointing out that if the US needed help, would other allies come to the rescue? This was something he said in Davos, and he's brought it back into the conversation around the Middle East a few times. So it feels like a real test of friendship and alliance at this point around security. Yeah. In his mind, anyway.
I think that's the key point, in his mind anyway, because I think he's convoluted the point of Article 5 of NATO with what is the action in the Middle East. But again, it's something we'll discuss a lot. And of course, I know Dan is all over as well. Dan's continuing amazing coverage out of Dubai. Good morning to you, sir.
Steve, good morning to you. Well, just to reflect on what you've been saying as well, obviously the president has helped to create a problem for the global economy here, with oil prices topping $100 a barrel again this morning as the Iran war now enters its third week. And that, of course, comes on fresh reports President Trump is racing to assemble this multinational coalition to reopen the Strait of Hormuz. Axios was the first to report this at the weekend, suggesting that Trump actually spent the weekend on the phone talking with European, Gulf and Asian allies and working to build what the White House is calling a, quote, Hormuz coalition here. Now, he named China, France, Japan, South Korea and the United Kingdom as nations that he hoped would contribute. And it's understood that countries will ultimately be asked to contribute the likes of warships, for example, drones, command and control support. That's according to the Axios report. But of course, the question of who sends what and when is ultimately unknown at this point. President Trump says, don't worry, that'll all be decided later. Remember as well, US officials have also told CNBC in the last week that those convoy escorts through the Strait of Hormuz cannot necessarily begin yet because of the situation inside the strait itself. Yes, we've heard reports today of some ships being able to pass through. India developing a trade corridor, the Chinese also talking more about helping Iran to get oil out. But at the same time as well, Iranian officials have denied the fact that the US has suggested that they've been laying mines inside the Strait of Hormuz in the last couple of days as well, which of course makes a bad problem worse for the US and allies who need to get that vital waterway back open again in order to tame what is now again triple-digit oil. It's back over to you.
Dan, thank you very much for bringing us the latest today. Now, since the Iran conflict began, the oil market has seen some of the most volatile price swings on record. Ben has more on how traders are navigating the developments and where oil could go from here. Ben, what's the buzz on the floor there?
Well, this is the sort of volatility that people here at Onyx Capital are navigating. Look at this. This is what we saw last week around this time, Sunday into Monday, the biggest intraday oil price swing on record. President Trump saying on the Sunday that he felt that a high oil price was a small price to pay for world peace. The oil price then spiked, and then after his press conference when he said he was much further forward with his aims than he expected to be by that point, the oil price fell back again. That is the sort of volatility that the traders and the team here, there's about 50 or 60 of them based here in southwest London, that's the sort of volatility they are navigating minute by minute, day by day. And to put that in context for you, one of them here says it's the most bewildering trading environment they have known. This is someone who's worked in oil commodities for more than a decade. And to give you just an insight into how much pressure there is, in normal times, if they misprice something, you make a mistake, it might cost $10,000. At the moment, with the sort of volatility I showed you on that graph, it's more like a $2 million mistake. That is how much is at stake. The difficulty is ascertaining how long the Strait of Hormuz will remain closed for. Dan was talking about it there. That is the key thing. But of course, for that, you need clear, reliable information. And there's a huge fog of confusion around the headlines and everything that's coming from the US at the moment. Steve.
Ben, thanks very much indeed. I would say to that trader, if it's the most bewildering time he's ever been in, what about the negative $37 close on WTI in 2020? But maybe I'll ask that to Felipe Elink-Schurman, who is the CEO and co-founder of Spada. Felipe, I personally don't think it's bewildering. I think it's a classic example of geopolitics dominating the key commodity in the world. And actually, the market reaction has been stunningly logical as well, unlike when there were concerns about WTI deliveries, which meant it had a negative $37 close in 2020. But more importantly, do you feel bewildered or not?
It is unprecedented. This is a very different situation than the WTI that you're describing. Now we're talking about 20% of the oil supply that has been disrupted, and particularly around products where you already have many different assets in Asia that have been shut down. I would say it's a very different story. Obviously, it is geopolitics, but the economic consequences, not just on oil, but also on second factors, are quite unprecedented and is meaningful.
Yeah, no, that's absolutely fair enough. Okay, look, it appears very binary to me from my untutored eye, mind you, having followed oil markets for nearly 40 years. Is this just as simple as the oil price carries on going up if the strait is closed and actually the oil price goes down when it is opened?
Yes, I mean, obviously, the question is how long it's going to take. But we need to make a distinction between the short term and the, let's say, midterm. The oil market will react very quickly, depending on if this keeps going or if it gets resolved very shortly. But on the midterm basis, one should not expect prices to come off to where it was anytime soon. This is going to take many months to restore. But particularly, as I said, on the product side of things, jet, gasoline, diesel, all petrochemical products. So this is going to be a long-lasting situation.
Felipe, it's Ben here, and one of the things that people in this room, in this very room, this trading floor, will be trying to work out is where the oil price is going to be sitting by the end of the year. Goldman Sachs have upped their range from $66 a barrel to $71 a barrel. All of that's predicated on assumptions about how long the Strait of Hormuz will remain closed for. What do you see as the likely resting point for oil by the end of 2026?
Well, the resting point, yes, I would assume that, let's not forget that we entered this conflict with ample supply of crude. I would say that, you cannot expect the current headline to be the end of year number. So around 70 to 80 seems reasonable to me. On the shorter term, given the supply disruption that we currently have, I actually find that the market is pretty quiet right now. I wouldn't be surprised that when I see the price action of products and physical deliveries, I would expect crude to keep ramping up slowly over the next days.
Carg Island has been mentioned in news reports over the weekend, and the president talking about not ruling out striking Iranian oil infrastructure. So far, they've only looked at military targets on that island. Given how little actually Iranian oil contributes to the overall global supply, just explain the significance of that and why that has moved the oil price so much higher.
Well, it's another step into the escalation of the escalation ladder, if you want. If the U.S. starts targeting Carg Island, which represents 90% of the crude exports from Iran, then we saw the immediate response from the Iranians, attacking all kinds of oil infrastructure and tankers. So it's not so much the disruption of the Iranian supply, but it's much more the impact that it has over the remaining supply from the GCC countries. So, and it's just let's not forget that we wanted. Well, the idea was that this was going to last maybe a week or two, but it's just another step in that escalation. Which the bigger issue is the 20 million barrels that are not being supplied from the region, and that is just another week of delays on the Hormuz Channel or Strait.
Felipe, there's no doubt as we get going this morning, it feels as though the conflict is indeed very messy from here. Can I ask you about the open and shut question? And Steve and I are doing verbal tango off the set, but it's fascinating because it's just put into my mind what sort of premium must still exist, even if the Strait is open theoretically, because warships, military devices and facilities are being used trying to keep that Strait open, given all the conversations Trump's been having over the weekend, what Europe is doing this morning. If the Strait is open thanks to warships in the area, does that make a difference to the pricing? And if so, by how much?
Well, let's define what open means, no? Because even if, we saw that at the beginning it was an insurance liability or an insurance question, and the U.S. provided support for that. But the problem was that, all of these owners needed to guarantee the safety of their crew. So you ended up in a de facto closure because no one wanted to cross. So even if you have those military support, then the question right now is on the mines. So there is this deer on headlight situation when it comes to shipping companies, and they're not completely guaranteeing that safe passage. So, but to answer your question, yes, naturally the prices should come off very drastically if that is guaranteed. But the first question is, will people accept that as at face value?
Yeah, and the other point too, which countries would get involved, which countries are part of any backstop here around securing the Strait of Hormuz, because there's been pressure now applied from President Trump for the Chinese to be involved. We know the Chinese have been taking a lot of product from the Iranians. If this as a major customer were to be involved here, then would that make a difference as well to the way the market viewed the situation?
Yeah, let's not forget that actually the US as a whole is benefiting from this, maybe not on a political standpoint, but economically as a country they're benefiting because they're a net exporter. But the biggest losers in this situation are the Southeastern Asian countries, but also China. China imported something like 70-80% of their oil from the region. So the consequences for China are also quite important. So to a certain extent, it makes sense for Europe, for these Southeast Asian countries and China to ensure that this strait is open again as fast as possible. They are the ones that would benefit the most out of this.
Felipe, we appreciate your time this morning. Thank you so much for helping us debate some of the facts we got this morning. Felipe Elink-Sherman, the CEO and co-founder Sparta. Coming up on the show, Unicredit takes another stab at Commerzbank. We'll discuss what it means for the German lender. Plus, Donald Trump says the US may hit Iran's vital Kharg Island oil export hub, quote, a few more times just for fun. We'll bring you the details on that story. And don't miss our conversation with BAE Systems Finance Chief Brad Grieve. That is coming up at 7:30 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
There's no doubt it was a bumpy ride last week for US markets, trading around the twists and turns around the Middle East conflict. And this is how we finished up in that Friday session. A pullback 0.25% on the Dow, 0.6 down on the S&P, and the Nasdaq in reverse to the tune of 0.9%. How much water now between the record highs and where the markets stand today? Roughly about 7% is how much we've drifted on when it comes to the Dow and the Nasdaq. So a little bit of room there in terms of the descent we've seen thanks to risk-off moves in the markets. Worth noting, though, in terms of some of the areas, Caterpillar, the stock that was down the Friday session, in terms of sectors, tech stocks are losing a little bit of steam as well. FANG stocks last week down 2.5%, and also the banks. So that's where you've seen some selling, lightening up 2.9% on the banking ETF. In terms of where the money flows have gone, worth taking a look at this trade. It is fascinating. A Bitcoin. Over the month, would you believe that institutional inflows have returned? It's not gone to gold, the traditional safe haven. You've actually seen about $1.3 billion in net inflows in March so far into those US spot Bitcoin ETFs. So the opposite of the reversal that we've seen since October, when money's been flowing out of the Bitcoin trade. For some reason, this conflict has been a trigger for money to return. And you can see the bifurcation here, 10% up on Bitcoin, 5% down on gold, which would typically have been the trade in a situation like this. Now, European futures, as we look for the start of the trading session today, this is how we approached. We are called higher. Last week, over the course of the trading week, we were down roughly 0.5% on the Stocks 600, so somewhat resilient on that mark. The worst of it, really, the French market down roughly 1% over the trading week. And given all the events we were watching, a fairly resilient trade for the European markets. In terms of US futures, this is the early picture this morning. We're also chasing some upsides. The markets are looking for a slight bounce this morning as they get going again. It's developments around the Middle East, the Strait of Hormuz, whether Trump can secure safe passage there, and just whether we're moving any further towards the end of this conflict. Chris Watling has joined us, a global economist and chief market strategist at Longview Economics. Chris, thank you so much for joining us.
Thank you.
We're pointing out the optics this morning, again, very challenging for investors, yet we've got a couple of risk-on moves which we're chasing. What do you think the mood looks like, and what do you think investors are thinking about right now?
Clearly investors are thinking about the Strait of Hormuz, full stop. But I think the mood is deteriorating. So I think at the end of week one of the war, people were fairly sort of confident / complacent. You know, the argument that Trump's got the midterms coming up, affordability is important, he's got to bring it to a quick close, Venezuelan style. And I think we've moved on from that, and we've seen a response of a regime that views what's happening as an existential threat, and so is prepared to do pretty much anything to ensure its survival. So I think, and now we're getting into the questions of how long can the Strait stay closed without major medium-term damage to the global economy and therefore to stock markets. So I think to date, you look at the S&P, it's rolled over a bit, but it's kind of where it was 5 months ago, sideways, sort of-ish. Other markets worse. But now I think the debate amongst investors is really, actually, we've got a bit of protection, but maybe we need to take some stuff off.
It feels like we've got a very important macro week. We've got central banks everywhere across the planet meeting, from the US, UK, Europe, Japan, Australia, Canada, Switzerland, Sweden, all discussing at their meetings the inflation story that's coming from the Middle East. At the same time, if you look at the data we saw out Friday in the States, the US GDP print, it was shocking in a way. A revision to 0.7% down from 1.4%, and well off the 4.4% we saw in the third quarter. So what does the US Federal Reserve do in this context?
Well, I think you'll see. All the rate expectations have been pricing out cuts in the US and the UK, and even pricing a little bit of a hike in parts of the world, and adding to that in places like Australia where they had hikes in the curve anyway. But what does the Fed do this week? They clearly stand pat. The debate, they were unlikely to do anything anyway. And this uncertainty, we've seen this many times. That you can almost write the Fed statement now. Uncertainty's high. We're watching, observing. They can't decide how long the conflict ends.
But in a context where you've got a president that is forcing the hand of the central bank through various different appointments, wanting those interest rates lower, yet the backdrop he's creating is one of higher inflation.
Well, yes, and obviously he wants a quick dash and a quick lead, but it looks like it's not going to happen. So he's essentially batting against himself at the moment, and I think it's very difficult to see how this thing comes to a quick close, absent a regime collapsing. But it doesn't look like they're going to collapse. As I said, it's an existential fight to the end for them, I think.
Chris, good morning to you, sir. While we're all quite rightly looking at the Middle East, there was that, I thought, extraordinary line from the Goldman Sachs executive last week that everybody seized upon as well, is the credit people, private credit, are probably quite relieved about what's going on because it distracts from the problems in that area. Is there something else in the market going on which, God hopes, let's hope this war can end very soon from a human point of view, if nothing else? Is there something else going on in the market that we should all be worried about that actually is a bigger concern, and that is that there is a private credit bubble bursting?
I think there is definitely damage in the private credit space. I think the story's not as bad as people suggest, actually. It's certainly bad if you're a BDC or you're a private credit provider. But the linkages into the financial system is not as deep as...
Why? Because, and I'll just come on to that, because I've grown up with the as have you, and Karen, slightly younger than us, about the canary in the coal mine comes from this area, comes from the bond market, comes from private credit as well. And all of a sudden, that canary in the coal mine is just flown away, and actually, it's struggling in the cage, actually.
You're right. Well, canaries in the coal mine is, of course, a very interesting phrase and quite important. And you're right, it starts at the edges. But we also grew up with a Federal Reserve that didn't print money all the time and create liquidity all the time, as it does in the last 15, 20 years. So
we've just got a guy who's waiting for his confirmation who doesn't believe the Fed should be printing money all the time.
Well, that's true, but they are expanding their balance sheet right now. So it's up by, last week I looked, it was up by 90 billion since December. So the balance sheet's growing. Now, it's reserves management, so theoretically, it's nothing along those lines. But the point is valid. And the point about private credit is most of the losses will fall on equity holders. It doesn't get into the banking system in a systemic basis, in a systemic way. It's very different from the GFC. There are issues with private credit that are separate, and I suspect, and I'm not an expert on this, but I suspect the issue will become private equity buying insurance companies in the US, and there's a lot of regulatory arbitrage to do with that and so on. But that isn't surfacing at the moment. What's surfacing is some of the individual private lending books.
So, Chris, we've thrown a whole bunch of negatives at you, from the credit market to the stagflation, inflation scenarios that central banks will be dealing with this week. What do you do tactically in terms of repositioning these markets? Because a lot of commentators are saying, look, we've been rotating, and at the end of this conflict, when it happens, you might see a rotation back to some of the trades, the European diversification story, Asia as well, emerging markets. Do you think that's going to happen too? Is that the opportunity?
Well, the irony is, coming ahead of this conflict, before it started, I thought things looked great for markets this year. They look very good for the global economy, and we're having that broadening. The problem is you're in a binary situation now. I wouldn't be surprised if oil went to $200 or even $250, because commodity prices go parabolic when there's a shortage of supply. So in that environment, there's serious damage to the global economy, and you completely change your portfolio. So the point is, you're one end or the other of the spectrum. So what do you do with that? You have to be very nimble, I think, basically. And adjust your risk positions very quickly. And of course, some people can't do that, so it becomes very difficult.